Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for June 11th through the 15th. I think we had a pretty exciting weekend. I'm recording this at 2 in the morning, so I'm going to try and make this very quick. Cover the four major indexes, S&P 500, NASDAQ, Dow Jones, Russell 2000, go over some stock futures, what it's currently looking like for Monday right now. It's a little bit red. What stocks traded in the after hours, go over some big names that were announced this week, AT&T merging with Time Warner, Comcast outbidding Disney for Fox, Tesla cutting jobs, Elon Musk buying back shares, Netflix getting upgraded, a couple of financials not doing so well this week just due to, rising rates should make the financials do better, but some, overseas stuff kind of kept that back. So let's go ahead, cover some of that stuff, and then we will end it with our research tab over on Merrill Edge and kind of see what else we may have missed. So that's basically it. If you are brand new to my channel, I do make financial related videos such as stock market, real estate related. We just hit 1,000 subscribers, so thank you guys out there who have been loyal and have subscribed. If you have not yet subscribed, hit the subscribe button, hit the notification button because I put out content weekly. And let's go ahead and get into it. So recap of the S&P 500. 3 out of the 5 days positive. Not so much up or down here. 5-day change up, only up 0.02%. Year to date, 3.97%. Some of the names here within the S&P 500. I mean, like what went on Monday? Trump met with Kim Jong-un, and not a lot was announced to the media. The trade or the talks themselves went well. Tuesday, we found out that everything had already been kind of agreed and planned out prior to meeting, so it all had blended over into the second day, into Tuesday. Wednesday we had the Fed hikes. Fed came out, we raised rates by 0.25%, and that caused, I haven't taken a look at the financials yet, but I know by the end of the week the financials didn't do so well here. Thursday, I think we already talked, and then Friday, what happened Friday? Tariffs. We woke up to China beginning to implement 25% tariff on about $50 billion of goods, and that really affected the Dow Jones, which we're going to be talking about here in just a second. Now NASDAQ up 1.32%, 5-day change, 3 out of the 5 days positive. Some of the stocks that did very well this week were, of course, Fox and Tesla and Netflix. Those are some big names within the index. The NASDAQ, they did very well. Up to date, the highest right now at 12.21%, beating out the Russell. I thought the Russell 2000 was actually higher, but we're going to cover that here in just a second. So here's the loser of the week, is the Dow Jones, down by 0.89% for the 5 days. 4 out of the 5 days in the red. You can see we made a video on Tuesday. We released a video covering all the stocks that were down year to date within the Dow Jones, and we covered 3 of them were actually very, increase in revenue year over year, net income, free cash flow year over the last 10 years. They also have really good PE ratios and decreasing future PE ratios expected to grow their earnings. So those are Dow, DuPont, Triple M, and Disney. So check those names out. Check that video out. We did a whole screening process on them. Russell 2000, 5-day change up 0.68%. I don't follow a whole lot of stocks within the Russell 2000. 3 out of the 5 days were positive, up year to date by 9.66%. I still wanted to include it within my index covers because kind of going forward, I think it's important to track the main indexes. I know back in the comments in the last week they had a viewer had requested that we kind of track this one, so I think I'll go ahead and include it on my thumbnail. That way week to week to week you can just look at the playlist, see, hey, we've had 3 positive weeks in the S&P 500, Dow Jones, and the Russell 2000. That's great. It's very visual. I like that. So after hours right now, futures are looking a little bit down. S&P 500, NASDAQ, and Dow. Some of the stocks that made some movements in the after hours. Time Warner is actually gone. If you look up this ticker symbol, it no longer exists. I believe that completed on Friday. Got wiped out. Monster Beverage up 1% after hours. Target down nearly 3% in the after hours. So interesting there. Over here at Market Watch, I like to take a look. This kind of gives me some most active stocks after hours as well. So Apple continuing to fall down. Apple dragged my portfolio down this week. I believe I'm down 0.44% between my Roth IRA, and my thrift savings plan. I am down a little bit here this week because all those in there. We could also see some negative here in Bank of America, Cisco Systems going down, General Electric climbing up a little bit, Wells Fargo. So financials on Friday, interest rates were going up on Wednesday, so you'd expect, loans and finances to get a little bit better, but overseas they decided not to raise rates, so that kind of caused the financials here in the stateside to not do so well. So they kind of held off on raising rates until next year. So that's going to affect the ETF, the financials. If you follow ticker symbol XLF, we'll take a look at that. And I believe that one fell by around 2%. We have Microsoft coming down a little bit, and AbbVie kind of dropping down a little bit. Oil. So interesting, some stocks in the after hours that had moved. Now, starting with some names that were covered on the news this week. We had AT&T and the Time Warner merger. They took on a whole lot of debt. So I know all across the forums and the groups over on Facebook that I follow, everybody was wondering, why did AT&T fall by nearly over 6% on Wednesday. That's just because that merger with Time Warner, they took on like $19 billion of debt, I believe. I'm not 100% sure on that number, but they're trying to do, analysts are going to try, and they've been scrambling around to try and come up with new valuations of what AT&T and this Time Warner is actually going to be doing. So I believe that this is a great entry point. I bought AT&T at $32, $33, I believe back in 2017. Now that stock doesn't move very much. So if you bought it right now, if you buy it at that $32, $33 mark, I believe the valuation is going to put it right around 35 in the future. I think that's just a good. I mean, they're taking on a whole lot of debt, but it's done and over with now, and now it's only going to get it better. And you're buying a lot of those that time. You're buying the complete package now of AT&T and Time Warner. Now, also, what happened this week? I believe after that whole merger, Disney was trying to, they have a deal right now to try and buy Fox. So Disney up this week 4.68%. Year to date, back in the positive. Remember on Tuesday we made a video, they were down. That would have been an excellent time to have bought Disney. So up year to date 1.25%, 5-day change 4.68%. I mean, this is a profitable company. Revenue up year over year for the last 10 years. Net income up year over year. Free cash flow. Great look in financials as far as what we had taken a look at. They're doing the streaming service. So if they can bring back those products from from Fox News, that's going to help them out. They're going to have so much there. You can see Fox going up 11.68%. And guess who they were outbid by? That was by Comcast. They have so much money. I know my buddy works telecom, and he always talks about Charter, Comcast, CenturyLink. And he said, Comcast is one of the better run ones as far as management, CEO, and, the upper management tier. The way that they run their company is actually one of the better ones. So they threw cash at the deal. They threw $65 billion in cash. They outbid Disney. But I do think Disney's probably going to win that. They're offering shares as some of their way of purchasing. They're actually doing. Disney has already offered to buy the same asset for around $52.4 billion, but that would be some of their shares included in that, I believe, is what it had said. And then if Comcast does win the bid, then they also agree to pay $1.5 billion in the breakup fee, which if they do accept, that'll be kind of going. And they believe kind of going forward, Fox is going to continue to grow. Right now it's up 11.68%, but I could see it hitting 45, 46, probably before that trade deal goes through. So that's just interesting there. I don't know who's going to win. I personally would think Disney should get it just because that whole merger of what they're doing with their movies, and they're trying to bring those collections together and such. I think that would be a good little deal kind of going on. But at the same time, Comcast, they're down year to date by 15.41%. 5-day change up 5.61%. I'm not sure how this one will kind of go out, how that will kind of work itself out. So Tesla on Wednesday, I believe it was, they announced that they were cutting roughly some 4,000 or 5,000 jobs, and it was mainly salary jobs. So a lot of those VPs, salary positions that maybe they don't need, in order to kind of cut down on some of their costs. It was some amount of crazy money that they would save per year. I know Jeremy over the Financial Education channel, he talked about Tesla on Wednesday or Thursday, made a video specifically covering it, how much money they would save per year, and the whole movement there. I think that was a good move for Tesla. They're supposed to be profitable by end of this year. And of course, stock went up by 12.75%, 5-day change. And on Thursday, so they went up very nice on Tuesday and Wednesday and earlier this week, just based off the news that they were going to become profitable and they're laying off all these high paid CEOs and salary paid employees. Thursday, Elon Musk had actually announced that he's going to be buying back $25 million of his own shares. So that was really good news there as well. So 5-day change up 12.75%. And now we're, yeah, okay, Netflix. Netflix, the only reason I included in this, it got upgraded. So I don't think there was any, because of the AT&T and Time Warner deal, Netflix kind of piggybacked off that, and they also got upgraded as well. Goldman Sachs upgraded them to a price target. They're at $391.98. Their price target right now by Goldman Sachs is $490. So that's the highest of all analysts, and that gave a whole lot of confidence to, you know, Disney. That basically all that confidence came from Disney and Fox, that deal being approved. So 5-day change up 8.71%. Year to date, that's crazy, 104.2%. That's amazing right there. And now we're going to go ahead and talk a little bit about financials. So here we can see a very nice spike on Wednesday, as we expected with the rate hikes. That's something I expect. Whenever we raise rates, I expect Goldman Sachs actually raised, JP Morgan, you know, Chase, have been red all this week. You can see both of them still are down by Goldman Sachs down 0.63%, JP Morgan down 2.89%. This one cannot catch a break. It's still a little bit higher, but it's trending back into the red right now. Goldman Sachs down 8.97% year to date. JP Morgan just kind of hanging on by a thread at 0.9% gain for the year. Now again, raised rates on Wednesday, but investors focus on the news coming from the European Central Bank saying that they would hold off raising rates until next year. So this really hurt the financial stocks, and mainly, you know, JP Morgan, Goldman Sachs, they were in the red on Friday. And let's go ahead. Here's the ETF, which goes over the financial sector. You can see some of the big names in here: Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Citigroup, and so on. So very good ETF. If you guys would like to check out some financials, it's so tricky right now. We're raising rates, but at the same time, there's so much going on there with the Fed and central banks. So 5-day change down 2.17%. Year to date down 1.58%. And that's all the financials. Now Friday, some of the stocks that were affected Friday from the tariff talk. So China came out saying that they're going to be doing a 25% charge on about $50 billion of goods on, you know, industrials and such. So Caterpillar was hit by that on Friday, down basically 2% on the news right off the bat. 5-day change down 3.41%. Rising interest rates didn't help them out as well. You can see once they started begin raising interest rates, they do a lot of debt, I assume. Maybe that's what kind of affected them negatively. So down, that weight kind of dragged them down there for the week. Also, Boeing had been up the highest in the Dow. That came down by 3.14% this week. Again, Friday, tariff talks, rising rates, a lot of debt going on there. Year to date, still up 21.35%, but coming back a little bit, 3.14%. I'm not sure how this one will kind of be affected by tariffs. Obviously, people are looking at it and scaling down their positions right now just because it has came up year to date by quite a bit. It's actually the leader in the Dow Jones. But I'm not sure where my opinion would set, where I would see Boeing sitting in the next year or so. If I would still see it at that 350 point, or if I'd see it more at that $325, $330 range within the next year. And energy, kind of talking a little bit about energy and oil. Actually, I don't know why I got that one up there. So construction ETF, construction seems to be. I know I posted an article on Facebook. I actually don't know if I posted that on Facebook. So some stuff I posted on Facebook. I made my video for jobs for teens or just anybody in general working for the minimum or becoming an entrepreneur in 2018. You know, when I was a teenager, I had no idea what I wanted to do. I didn't want to go to college and take on all that debt because I knew college. I didn't know what I wanted at the time, either telecommunications or something else. So I went out and just joined the military, and that gave me enough time to kind of decide where I was heading. So here, talked about working for the minimum. Couple interesting stocks there. Basically, China's Netflix, Amazon, Google, and YouTube. We had that news kind of going on. I thought it was really impressive. First president to just sit down with the North Korean leader. AT&T Time Warner merger complete. We did our video with 15 stocks currently down in the Dow Jones. We covered them, 15 of them, 7 of them are actually showing pretty good financial metrics. The 3 strong ones were the Triple M, Disney, Dow DuPont. Oh, Domino's going to be starting to fill up some potholes here throughout the United States, fixing up the infrastructure. Wednesday, raising rates. Wednesday, we did the 6 stocks with activities next week. Pretty good little selection there. Comcast outbids Fox. We did our giveaway on Thursday, K971. I sent him that $10 gift card. Congratulations, K9. Briggs. And okay, so I didn't post it over on Facebook, but let's see, what were we covering? Oil. No, we weren't covering oil. What were we covering? Construction. So basically, there's a big scare right now that we may be going into another recession and housing prices, but I don't believe right now that we're going to be going, especially not over the entire market of the U.S. If you look at specific areas of the U.S., some areas are just going crazy. I know locally here, where I'm at over in Oregon, we are getting crazy right now. Where houses, you can't get into a house like a 3-2 bedroom house for anything less than 275, at least 250, 275,000. I bought my house back in 2013. It was only the price back in 2013, 2015. You could get interest rates at 3.25, 3.75, and you were paying for a 3-2 right around $175,000. Now you can't find a 3.2 for less than 250. Rent has shot up from $700-800. If you're trying to rent a 3.2, it's $1,500 here. Pretty expensive. So I know there's a lot of local news going on where people can't afford their rents because people are coming up from California, coming down from Washington, and construction overall, I think it's growing, but I don't keep track of a lot of stuff external to me. Basically, anything within an hour and a half drive time is where I kind of keep track of real estate now. So I'm actually looking. I've looked locally. There's not a whole lot here. I'm looking at other towns nearby that are at pretty good buying points. So I'll be showing off here something very close. I'll be doing like some walkthroughs and stuff with you guys. So oil came down hard on Friday, so did very well throughout the week, and then Friday sold off aggressively, going down by 3.44% from its technical resistance level. So it actually broke below its resistance level, and this was all due, or it could have been due to Russian Energy Ministry said that Russia and Saudi Arabia are supporting a gradual increase in productions, and they're expected to, produce more, which kind of caused possibly the oil here in the United States to kind of take that slump down at a loss of 3.44%. 5-day change down 1.66% there. Silver down, as the stock market itself, rising interest rates go up. I believe generally that the materials themselves, they go down. So you're going to see silver kind of going down there, gold going down there. I don't have the bonds right now. Ticker symbol is BND, I believe. BND. Total market bonds, and this one doesn't give me the yield. I know yields coming back up on the bonds near the 5%, or not 5%, 3% bond level. So coming up out of there. Now, market update, weekly recap. So let's kind of finish off with that. So let me go ahead and zoom in. So weekly recap, we had the steady recap there of all the indexes. So we had, President Trump meeting with Kim Jong-un and inappropriate comments from Canada. Oh, okay. So that was something I thought that was Friday that they talked about this. President Trump prepared to sign the customary joint statement. with Canadian Prime Minister. Okay, then we had the meeting on Monday. Okay, yeah, Fed raised rates on Wednesday. I know I work at a credit union, and we announced, internally that we raised rates by 0.25% across the normal loans, HELOC loans, personal loans, all lines of credit basically increased there. So there goes I got an increase there on my HELOC. That was not fun, but oh well, you know, I need to go just buy. I don't need to worry about flipping right now. I think I'm just going to be buying some houses and financing them out and then worrying about doing some fix and flips in later. So I found a very nice market nearby that I'm kind of screening through right now, taking a look at population growth, job growth, what kind of an industry, uh, what attracts people there. It's a college town, so we're going to be doing that. Talk to a couple other investors that own properties out there, both commercial and residential. So talking to them, just kind of getting in their ideas. Japan here, conducting policy interest rates, okay. AT&T, yeah, they won the battle. They got acquired Time Warner, and that really helps here. Comcast now made a bid for that. Gave Comcast that basically the umph. I can't think of the word. It's nearly 2:30 now in the morning. How long have I been recording? 21 minutes, so not that bad. And then tariffs on Friday. China responded, imposing a 25% tax tariff on 34 billions. I thought it was 50 billions. Okay, so he approved 25. Oh, so we approved 25% tariff on 50 billions worth of Chinese goods. China responded with a 25% tariff on 34 billion dollars worth of goods. So there we go. We took a jab. They took a jab. We're going to see how this works out in the end. There may be some jobs lost due to this, just due to trade wars. That's what happens. Some jobs get lost here in the industrial. So I guess we will see where that kind of goes on from there. So that is basically it for this week. If you have enjoyed the video, remember to like, comment, subscribe, hit the notification button. I put these out every week. Try and cover some news that was announced during the week. Cover the 4 major indexes and kind of the highlights of the week. So hopefully you guys did enjoy that. If there's anything else you'd like to have included or talked about on the channel in general, either from basic financing, getting everything in order, the whole progress of how anything really. So, or just leave a comment below. Say hello. I like responding to people. I like reading your guys' comments. I will go back and forth and talk about anything really in the comment section, or if you head over to the Facebook group, and post anything within the group or just on my financial investor channel or the page itself, I always respond back to you guys. So I always like kind of chatting. I'm on a computer every day. That's basically my job. I'm on a computer all day, every day, whether it's Monday through Sunday. So that's it for you guys. I will catch you later. As a friendly disclaimer, by the way, I'm not a financial advisor or tax professional. The information provided in my videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them, looking at some news that was covered this week, taking it and kind of analyzing it. So that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.